What's up, people? It's your boy Clement here, and today I'm here with my partner
Ebenezer.
And as usual, we're gonna talk some money. So coming from EBC Financial Solutions, and you already know what we do, right?
Yes.
We talk about money. We help you build credit. We help you learn some common sense when it comes to money.
Yeah.
You know, common sense is common, but not common to common people.
Yeah.
So we do this, we learn together.
Yes.
Be sure to always drop your comments from what you learn from these videos.
Always.
And if you have any advice that you want to put up, we all learn together.
Yeah, and check the link for consultation. And shout out to you guys who have been watching the videos and been giving suggestions and letting us know how much this video has helped you guys. Even if we are able to impact one person, it's it makes a lot of difference. And we also learn, because sometimes we don't talk about this, we know, but when we get on the set, then he learns something new, then I learn something new and stuff like that. So, and then he's been gone for a few videos now, he's back, so let's get it.
Yeah, let's roll with it. So today, what are we talking about?
Today, this is the topic that I've been wanting to talk about. One of them, I think no, it's not, it's PayDay and title loans.
PayDay and title loans. I've never gotten one of those.
No.
But from what I've heard people
say, think it's criminal?
It's one of the worst.
You say it's criminal?
Money decisions. I think it should be illegal.
Why do you think it should be illegal?
I mean, it has 400, 300% interest rates on them.
Really? I thought it was 20, 50% or something.
See, when you think about interest rates, right? The crazy part that people don't know, when they say APR, that's how much interest you're paying for the entire year, right? Which is why it's called APR, annual percentage rate. So let's say I borrow $100, and they tell me that the APR on that is $20. That means that for the entire year, I'm supposed to pay $20 on that $100. So what they do is that they say APR is 20%, they take it and they divide it by 12. So every month you pay a portion of that $20. So if I'm paying 20%, which is $20 on a $100 loan, they divide that by 12, which will be around 1.8 or something. So that means that every month I'll pay $1.80 on that loan. If you borrow money and I give it to you and tell you that, okay, I'm giving you $100 in 1 month, you're gonna pay me back 20%. You're gonna pay me $20 on it in 1 month.
Yeah, that's the
rate. The APR is not 20%. The APR is 300% thereabout.
So wait. First of all, let's clarify the difference, right? Yeah. Let's clarify the difference between a PayDay loan and a title loan. Okay, I think I may have to let you explain that. So, but I think that the title loan. Let me start with the title loan. I think the title loan is when you need a loan, and then you go for a loan, but because maybe you don't have a good credit and you're nothing, you are desperate and stuff like that. You give your car title, right? You give your car title to the loan, to the financial institution, whoever is borrowing the money as title loan. Then they give you money back in advance. That loan, I have to check in detail, but I think the interest rate is atrocious. It's crazy.
Interest rate is about 300%
for the title loan.
Yeah.
So the faster you pay that money, the faster you are off the hook.
Yeah, and these are short-term loans. Right?
Yeah.
So they give it to you. It's not they don't give you the money to pay it back in a year.
Yeah.
When they give it to you, they expect you to pay it back in a month. Which ties into what I was saying. For a regular person, if you give them $1,000 and you tell them, a month later, you're gonna pay $1,100, they think, I only paid 10%.
10%, yeah.
But if you calculate in APR, that 10% wasn't 10%. It was a whole lot more.
It was more. And then, so one thing that I will have to probably look into more is if it's just for car title loans.
So for the title, from what I know, the car serves as the collateral. But
is it only car titles that are taking?
Sure I am pretty sure, and if you're watching this and you have more experience in it, you can let us know. But I'm pretty sure if you have different assets that are valuable,
you can put it as collateral.
Yeah, it's just that, I mean, out here, what can you put? Because if you're going the house route, that's the home equity line of credit.
Yeah.
Right, so that's different.
Yeah.
But it's like, apart from a car and a house, unless you have gold or something,
or like a motorcycle or something.
Yeah.
But let's just stick to the car. It's you need a loan, and you need a loan desperately. You take your car loan and give it to like your car title, give it to them. You get a loan back, and the interest rate is crazy. So now let's go to the payday loan.
So payday loan is where, you know, my paycheck comes at the end of this week, but I'm desperate, right?
You need money to buy something, groceries, whatever.
I'm short. So I go to them and I say, hey, by the way, I'm borrowing against my future paycheck. The money you haven't received yet, right? You're borrowing against it. So I'm borrowing against my future paycheck. When that paycheck comes, then you take out.
Then you take out the money.
And then you get the money.
How does that even work? So that's gonna be fixed without no interest.
So they call it finance charge. Even though it's interest, they call it finance charge. So they're like, oh, okay, you're borrowing $100. When you pay the money back, you have to pay $120.
Okay.
The $20 is finance charge.
Okay.
You know, but if you're paying 20% on a 1 month loan, that's like 400% APR. That's the crazy part of it, right?
That's crazy.
So for that one, you don't have to use anything as a collateral, like the
title and stuff.
But you're borrowing against your paycheck. Now, in terms of credit,
so I don't know if you've done that research, but how are they gonna know you're gonna pay? Do they have any form of connection to your paycheck that if you do not pay, or it's like automatic, like you get paid and automatically get transferred to them? Like, you know how it works?
I don't think it automatically goes, but you know how, like, when you go in to get a loan, even a personal loan, you have to give them your paycheck, like 2 or 3 paychecks to prove that you actually make money. So that's how they will do it. And the difference is that the title and the payday loan, if you don't pay it back, they can drive you through collections to get their money.
Yes.
The title loan, they don't do that because
maybe they already have your car, so you will just sell the car. That's another important thing that you brought up. With the car title, if you get the loan, your car could be worth $20,000, and if you go get a $1,000 loan and you don't pay, you may be in danger of you losing your car.
And the funny thing is, they will never give you a loan equal to the value of your car.
No.
Right?
No.
So if they evaluate your car and your car is worth $100, normally they will give you up to 50% of your car's value.
Oh. So they can sell your car for profit.
For profit.
Yeah.
So, because they're already charging you a lot of interest. So that's assuming that, okay, if the person is not able to pay, then if we sell their car, we should make enough to cover what we give them and the
come
interest
on top. Yeah.
we charge them and still come on top. So whatever your car is worth, they'll give you up to 50% in loan. And then if you don't pay it back.
So you were saying something like, you think they should not allow those type of loans to exist. Why do you think so?
I honestly think they take advantage of
people,
desperate people. You know, and maybe I say that because, you know,
I think so in a way, but in this world, everybody is in it for the money. Yeah. Everybody in it to make money. So they are, because there's like traditional institution for giving loans, like those big banks, and they'll give you personal loans and car loans and stuff like that, right? But you have to use your credit that you have to be responsible to build, right? And if you're unable to get a loan from those banks, that means you are either responsible or have not built your credit, and you cannot be trusted, which makes sense. and that means you can't get a loan from them, and that you have to get loan other ways. So those people do exist, and they don't work with the credit card system, right? They don't work with credit report history and stuff like that. They just say, we are there, we exist, and you don't need to run your credit, nothing. We are going to take your car title, and then we are going to give you the loan that you need, that the banks are not going to give you. But in return of that, you're going to pay this large sum of money. I don't think it's entirely should be banned. It's just the APR on them, the interest rate. The interest rate.
That's what, because the thing is, for a regular loan, mostly it goes through a process.
Yeah.
Right. If you need a regular loan from the bank, they don't give it to you the same day like these people do.
Yeah.
Right? So
that too.
Yeah. So sometimes it goes through a process. So sometimes if you need like money desperately to do something, which I mean, out here anything can happen to you anytime.
Yes.
You know, so if you need money, your child is sick, your parents, somebody is sick, and you're desperate for money to do something real quick.
Mm-hmm.
You know, it should be okay to get that money, especially if you're using your car as the collateral without all that interest rates.
Mm-hmm.
You know what I'm saying? Because they're basically doing what the bank does. It's just that their process is a lot faster.
It's a lot faster.
But if you charge somebody so much in interest rate, I feel like you're taking advantage of them.
In a way. I think maybe the laws should be able to like control or limit the interest in a way, depending on the terms and how long you can get it. But still, it's a business. Then just don't go get it, right?
Yeah, I mean, hey, these payday title loans, if you're watching this, that should be your last ever resort. Like, you explore all your options, even if you have to just go beg people for money.
It's just like cash advance on a credit card, right? Cash advance on a credit card is where you have your regular credit card, let's say $5,000, and they will give you an ability for cash advance, say $1,000 or $800. That when you really need money, you can cash out from your, because usually you cannot cash out money from your credit card as cash, right? I mean the money as cash you can only use to purchase something. But sometimes if you actually need, I've used it before because I wanted to try it, but that runs quickly too, just like these type of other loans. Is one of the last options that you should consider if you want to. So sometimes when I go to do like the times that I've done the pedicure and stuff like that, when I go and I don't have cash on me and I can't tip them on their system or whatever, like I get cash from the ATM. And when you get it from your credit card, then you have to pay cash advance fees.
Yeah.
And then the faster you pay, recently I found out that because I used one like some time ago, and the funny thing is, when you make payments in addition to that with other things, when you pay, it doesn't necessarily go towards the cash advance fee. I realized, I was like, they still charge me for the cash advance fee. I mean, it was very little, but I was like, I thought, because I have paid, let's say if I use only $20, I've paid over like $400 for some time. But because of the fact that I haven't paid everything of my credit card, it looks like it was kind of factored in the final bill or something. But that's just by the way. Just make sure that the cash advance, payday loans, title loans, they should be your last resort.
Yeah. If you've explored everything
option,
and that's the last resort, and once you go for that money, be sure to pay on time, which will be the next one. What happens if you don't pay? What happens if you don't pay? Title loan. If you don't pay, like you said already, you use your car as a collateral. You sign a contract, giving them the power to show up and take your car away if you don't pay the loan.
Yeah.
So
it's just like repossession at this point.
Yeah, they repossess it. So your car is worth $20,000. You went in for a $2,000 loan, and then they can take the car away.
It's theirs. It's theirs.
Just like that. It's theirs. So that's what happens. The title, the payday loan, if you don't pay it, they keep building interest. So, and when we say, so if they give you the...
Ooh, so payday can literally turn into collections.
Yeah. If they give you, let's say, $100 and they tell you that you're going to pay us 120 at the end of the month. And you don't pay it.
So payday is monthly.
It can be monthly,
paycheck to paycheck, to 2 weeks, whatever your paycheck is. Okay.
So I'm just using the monthly to make it easier for people to understand. They say $100. You're gonna pay us at the end of the month. Let's say $20. The end of the month ends, you don't pay it. They can put another 20 on it and pretty much make it another term. So now they're like, okay, based on the calculations you showed us, your next paycheck is the end of the next month. So now you owe us that finance charge.
Yeah.
Another $20. And then it builds on top. So if you go for, let's say, a full year and then pay it, that $20 times 12 is $240. So that $20 turn into a $240 interest.
Just over $100.
This is $100. So now you owe them $340. That's 240%.
So eventually, if you do not pay, they are going to take you to collections, and it's going to appear in your credit report.
Yeah, and they're going to chase you for that.
I've watched videos where there's been people who like get caught in that cycle. Like if you are doing like paycheck to paycheck most of the time, like they get the payday loan, and then they do it because they don't have any money remain like on or somewhere or whatever. They keep going for it. So this month they go for the payday loan.
Yeah.
They go again, and they keep going like every month. Now it's like their next paycheck.
Cycle. Yeah. Because I mean, think about it. If you're living paycheck to paycheck, right? And let's say you break the cycle at some point. Something happened to you, an emergency situation or whatever, and you didn't have any money saved to cover that. So you're like, all right, I'm borrowing $1,000. When my next paycheck comes, I'll pay it. When the next paycheck comes and you pay that $1,000, now you're short.
You are short that money.
Next paycheck.
So now you are literally out of money, and you have to go for the payday money again. So
you go to them and you say, all right, I'm paying you with my left hand, but I'm borrowing again with the right one. Because if I don't borrow, my money is not enough to cover my expenses. So you pay them and you take. Next one comes, you pay them and you take. You're always robbing Peter
to pay Paul. In a bad way. Sometimes you can rob Peter to pay Paul in a good way. This one is bad. So what? Before what was the consequence on the? I mean, they both almost the same, but the one you just talked about, the consequences is the payday.
Yeah, the payday is.
We have already talked about the title loan. So they take your car. Yeah.
So. Again, thank you guys for watching.
But no. Before that, one thing I think we keep saying it, that please try and build an emergency fund. Always try and have like different ways of building emergency fund. We don't have $1 million or whatever, a lot of money, but we try to build like $500, like $1,000, $2,000.
Even if it's $10. You know, money it builds up.
It builds. It's gonna go slowly. But then it's gonna end up in the end. And then apart from the physical cash from your paycheck or wherever else you get money, try and build your credit. And that's one of the things that we help build. Try and build your credit and secure some credit cards. Yeah. Because if you have credit cards, there are some things that you need cash for. But there are some things like maybe utilities and like groceries and insurances and stuff like those things. You don't necessarily need cash. You can use credit card and pay them later. So if you have credit card with decent limits, you can put those charges on there in terms of emergencies and things like. I pay all of my bills on credit cards whenever they are allowed, but then pay it off anyways. But in case you are not able to pay back right away, that's when you can put it on the credit card and then probably stretch it for a little. Yes, you're going to be paying interest, but you don't have money now than to go for the bureau title loan or payday loan. Yeah.
And speaking of that again, the credit card you mentioned, it brings up a good point, right? So imagine the cycle that we're talking about. Getting stuck in a cycle where you're paying and then you're borrowing. You're paying and then you're borrowing. If you have a credit card, it works out perfect because once you borrow, next month your statement comes and then you pay it. So you don't pay any interest.
You don't pay any interest.
You don't pay any interest. You're borrowing, you're paying, and you're just keeping it going, right?
Yeah.
On the other hand, if you have a payday loan, if you're borrowing and you're paying, you're borrowing and you're paying, you're actually paying interest
every single time.
And
the thing is, with credit card, if you don't pay the full balance at the end of the month, that's when you pay interest, right? And also, with credit cards, some of those are the things that if you reach out to us, you're gonna help you understand better. But the thing that some of my credit cards is there where they allow you to actually divide the money, like pay over time, and then you don't have to pay interest. So when you set up that, you pay only a small amount of fee when compared to the interest rate is way better. Yeah. So I think to not make it too long, let's end it like this.
Yeah. So it always comes down to one point. Like he said, build a good credit for yourself.
Save money
for yourself. That way you don't get caught up with these guys. And these title and what is the other one? Payday loans.
Payday loans.
That should be your last
resort. Like,
if you hear it and you can
run away, because it's brutal.
Yeah,
like
it can get you messed up.
So
don't find yourself in there. Thank you for watching the video. We've all learned good things together. And we'll continue to learn and educate ourselves. And if you have anything that you would love for us to talk about money wise,
reach out.
Be sure to drop comments. Be sure to reach out. And as he's mentioned,
and share for us.
We help people build credit. So if your credit is down, or if you're looking to start building credit, we are your guys.
Even if you want to get into a business credit cards, it all starts from the personal side. But still, if you want to anything related to like money, it's not, we don't know every single thing, but a lot of things, mostly like credit related, build on the personal side, the business side, and lines of credit, like those type of even we actually I've helped multiple people, if you remember, like those we have helped for car purchasing, right? Times to purchase car. I think one of our next videos is going to be the good time to purchase a car. Those things, like what you should be looking for. There's so many things that goes on financial. It's a system that has been created, so you have to learn the system to beat the system, right? So thank you guys.
Cool. Thank you for watching.
We'll catch you later
in the next video.
I got to
watch it.